You're watching Notepad. I'm your host, Ibrahim Sani. It's been a few weeks now since the revelation of the Pandora Papers, and much have been discussed amongst our circles on how we can improve on this. But to be honest and to be fair, nothing much have changed from the previous revelations that we've had before. So we need to look at not just the structural changes that needs to be done, but perhaps what folks like you and me can think about moving forward in terms of bringing greater transparency on how people evade tax, on how people manage tax, and of course the conversation of how estate planning can be done with more scrutiny, at least from the sense of regulatory purposes. So joining us for this evening is none other than Dr Veerinderjeet Singh. He is the non-executive chairman of Tricor Malaysia. He's also the president of MIGPA. How are you, Dr Veerinder?
I'm good. Thank you, Ibrahim. Good.
You know, the last time we had this, I guess, so-called revelation, people were aghast, people were shocked, but at the same time, that whole concept of nobody's breaking any laws or any rules, and that frustrated a lot of the regular folk, from developing countries to developed countries. Yes, of course, some are indeed hiding their stash of cash or hiding their wealth. But for the majority of the rich and famous, it's more of this opaque estate planning to a point where we try to wonder why they don't do it out in the open, for instance, using normal banks, Maybank, CIMB, whatever. But clearly, nothing has changed from the last revelation to now. And if there ever will be another set of Pandora Papers or Panama Papers or all the kind of other A4 papers that you have in the future, it's still going to be the same. So my conversation to you is this. We really need to have a long and serious conversation on how we need to shift our tax structure, tax regime, to bring out the opaqueness of this out in the open so that people are treated fairly. My tax rate is 20+%. I'm sure the rich and famous have to pay at least the same, right? I mean, I'm not a rich person. So the element of unfairness kicks in. What do you think, Dr. Veerinder?
Yeah. Thank you very much. But let me perhaps set this a little bit in context, if I can, Ibrahim, just for the
Go ahead.
for the viewer, for the listeners as well. We've had the Panama Papers in 2016. Then we had the Paradise Papers, and now we have this particular Pandora Papers leak. And what is unique about all this is that it all starts with the letter P, all the names. So there is an underlying objective why this particular group of journalists, ICIG, investigative journalists, are doing this, and how they get access to it and then releasing it. It is to actually create some awareness among people about the so-called rich and famous or politicians using offshore companies or offshore banks to perhaps keep their wealth. It is not necessarily about doing something illegal, because the reality is when we look at the tax systems around the world, there are basically two types: the world income scope and the territorial scope, right? Malaysia practices the territorial scope, whereby, and just like Singapore, Hong Kong as well, and a few others, and we only tax individuals and companies on the profits, earnings, income derived from Malaysia, right? Activities done here and operations done here, or investments made here and where the returns are coming from Malaysia. So unlike many developed countries, and the prominent example is the US, and which adopt a world income scope. So I give you the background. The US would be a situation where a US citizen or US corporation would need to report all earnings, all income that they make anywhere in the world, even though they are operating outside the US, because they have a world income scope. Because you are a citizen, or you are a resident, or because you incorporated your company in the US, you are now required to file your tax return on the world income basis. So therefore, when you have the world income basis type of system of taxation, it means that wherever your money flows, if you do make earnings from it, you have to report to your parent or to your home country. And this is where the especially in the US and many parts of Europe, the wealthy individuals may look at ways and means of moving their wealth overseas, use the wealth to invest, have returns or earnings, but due to some provisions in the law, they do not report this to their home country. They may report it to the country in which they make the earnings, but usually these countries where the wealth is concentrated would have low taxes, or in some jurisdictions even zero taxes. So this is called part of estate planning as well, as you alluded to earlier. Now, is that illegal? From the US perspective, they consider that illegal for individuals not to report. But for corporations, there are certain clauses in the law which allow them not to report. And when they bring the money back, then they are taxed. So there are some provisions, all right? Now, Malaysia, coming back to Malaysia, because of the territorial scope, the fact that you may have some Malaysians named in the Panama Papers or the latest one, Pandora Papers, it doesn't mean that the person has done something illegal. There's nothing in our laws which disallows you from incorporating a company offshore. Nothing to prevent you having an offshore account, bank account with banks overseas, all right? So number one. But the motivation as to why would someone have an offshore company, especially in places as exotic as the BVIs or Bahamas and all this Jersey and Guernsey and so on, and where would their wealth come from are the questions to ask, right? You and I probably may not even go there, because why would I need to do that? You will need to do this only if you have an extensive amount of wealth or earnings derived from outside Malaysia, and you would like to keep it there. So first question really is, how did this earnings how did the capital that you invested overseas, how did you derive this? And if this came from Malaysia, then the question to investigate is, this should have been perhaps taxed, or maybe in some circumstances is exempt, and therefore has gone through the banking system and moved to an overseas jurisdiction. And then there you invest, you earn, you make money. Malaysia cannot tax it because it is derived overseas. So the issue here is about the source of the funding that went out, right?
Yeah.
So that's the key. Now, when you talk about the other aspect is also this. There are many Malaysians who are actually working overseas, even though they keep their citizenship here, right? So they open offshore accounts and so on. That's okay. We also have Malaysian companies which have really gone big overseas and set up subsidiaries, so they will be allowed to operate overseas accounts and all. So leave that aside. So let's look at the situation of where the persons are here in Malaysia, and yet the Panama Papers or the Pandora leaks gives us a list of individuals from Malaysia who have got these companies offshore. So first thing, not illegal. Second thing is you have to ask is, why are they doing this, and why not in Singapore and so on, right? And why in these exotic locations? And the rationale for many of these locations to be used is largely because these particular offshore financial centers are actually areas in which the doing business is very easy. The rules are not as intense. The documentation is not that intense. There are strong secrecy provisions, so no one else can find out about this. And it's easy to set up an account, easy to set up a company, and unlike what we may face in our own home jurisdictions, all right? So convenience and easy to move funds around and very minimal tax or no tax at all, right? So that's why this becomes a BVI or Bahamas or Bermuda or Guernsey and Guernsey. All these islands become convenient place to hold the wealth. So, or to set up what we call a holding company for your investments. Now, but the point to also bear in mind is if your investments are through an island, entity in an island like BVI, but it is in the UK, it is in Hong Kong, it is in Germany, you must remember that there will be domestic laws in Germany, Hong Kong, UK, which probably may cover that income that you may derive from those countries. So there may be an element of tax. But then again, there could be a particular provision whereby it may exclude this from taxation because Malaysia, for example, we don't tax dividend income, right? All the dividends that we earn are not taxable. In some other jurisdictions, you may have that as well. So therefore, if you plan this properly and deal with assets or fund managers and so on, there may be ways in which the investment could be exempt, could avoid taxation because of the underlying rules. And this is because we do not have an international tax system that is fairly uniform across the world.
Right.
And you know very well that taxation is a national sovereign right. And countries.
Dr. Veerinder, we're going to take a short break before we continue our conversation with you. We'll be right back after these messages. Welcome back. We have with us on the line Dr. Veerinderjeet Singh. He is the president of MICPA as well as the non-executive chairman of Tricor Malaysia. Dr. Veerinder, very recently, more than 130 countries have come together and agreed to a rather groundbreaking proposal to charge a minimum corporate tax rate. They finalized the rate, which is 15%. This is the idea here is to, of course, bring about an estimated 150 billion US dollars more from multinationals. This is to sort of like take away the element of tax havens from corporations. And it doesn't really matter where the corporation is being incorporated or operating out of, and the definitions of how they earn money. All that is non-existent any longer because everyone's going to charge at least 15% from total profits earned. This is great. We've been talking about this for a few months. The last time you were here, we were talking about the reality of this going through, and now it's come to pass. Can we see something like this for individual taxation or income tax or estate planning tax to a point where it's not a corporation but it is to the person itself? What's your opinion on this?
This is, you are referring to the OECD initiative, and
that's right.
They call it the Pillar 1 and the Pillar 2 of what they call it the BEPS 2.0 project, right? Now, the bad thing about this is that this doesn't cover individuals. This only covers corporations. All right. The second thing, which is not so great, is that it only covers certain corporations, and therefore the large multinationals in the world. And I had when I looked at all this data and read various reports, something like 2,300 corporations around the world will be affected by this. So, first reaction when I read about this, I'm referring to Pillar 2. Pillar 2 is about the minimum global tax of at least 15%. When you first heard about this, it was actually, you used the words groundbreaking, because it gave the impression that taxation around the world will be at least a minimum 15%, no longer 0, 5, 10, or 3, or whatever. Unfortunately, that's not the case. This is only for the very large multinationals which are dealing across borders. And for them, there is a complicated set of rules that you look at, where you look at the effective tax rate in the jurisdictions they operate. And if it's below 15%, first choice will be for the parent country, where the parent company is located, the HQ, will then add a top-up. For example, if let's say this entity, a subsidiary of Amazon, assuming Amazon is covered, operates in Malaysia, and it seems to get a tax incentive, and it only pays corporate tax of 5%. If you then look at the global performance of this group, you look at the effective tax rate in each country, you find that Malaysia obviously is below 15. So therefore, we are paying here, you are paying let's say 5%. You can then top up a 10%, add up a 10% on the Malaysian income. But who will collect this? It is the parent in the let's say US, where Amazon may be based, or that's the headquarters. That's where the additional top up goes. And the first cut is that. The first choice goes to the country at which the parent is incorporated.
But that's not the idea. I mean, that's not the concern here. The concern here is taxation due is taxation paid. It really doesn't matter which country, right?
But the issue with this minimum global tax is that the country in which you operate doesn't have the amount of a top up. They will only collect the 5 that they give you, they charge you, or they don't collect anything at all.
Yeah.
It's going back to the developed countries where these large corporations are actually headquartered, right?
But do you feel that this can be replicated in some sense in property gains tax, in estate planning, sort of wealth tax, I don't know, inheritance tax, death tax?
The problem with this is that the OECD initiatives are only looking at income tax, which means corporate tax. That's all. It hasn't gone, and even if you look at our double tax agreements that many viewers may be familiar with, they only deal with income tax matters. So there is actually no double tax agreement for capital gains tax, inheritance tax, and even indirect taxes. There are no double tax agreements. So therein, well, you still have gaps in the whole system. Whatever it is, this particular initiative is probably a step forward, but the initial idea of many is that a 15% minimum tax rate for corporations around the world would be great. But if I don't have a multinational as large as the 2,300 companies that are estimated to be impacted, someone below that, they will continue to have a low tax rate in the jurisdictions they operate, like Malaysia. We give them incentives, Singapore gives them, Thailand gives them, and then the headquarter companies, no additional tax will be due. So I do not know whether in the future you'll find that this could spread to more and more companies, more and more countries, and then see whether they will then give you a landing on a global minimum tax rate. So it is a start, but it's not yet there. And it doesn't cover all the other taxes. So it's a long journey, but are there plans for the OECD to even look at beyond corporate tax? As far as I know, no, because these initiatives were all came about because of the digital economy.
Yeah.
Yeah. And the Amazons and the Googles around of the world were actually making tons of money all over the place, but the effective tax rates are very low.
Dr. Veerinder, my final question to you is this: what's the next thing for us when it comes to this? How do you see this will pan out?
Yeah. So perhaps the issue here will be lessons for Malaysia. Maybe we can look at that. Does it mean that in Malaysia we should stop giving tax incentives to the large multinationals, or we tax them at 15%? All right? Because if they have the large multinationals, their home country is going to collect the additional tax. So maybe for Malaysia and for the other countries in Southeast Asia who are incentivizing and trying to attract FDI, maybe they should look at a minimum tax rate of 15%, no more zero tax rate, no more 5%, 10%. But they should focus on the non-tax incentives you can give to a multinational to attract them to set up their base or the headquarters here.
What about individuals, Dr. Veerinder, those that have been named in the Panama Papers, names like Tunda M. Zainuddin, like Tengku Zafrul and the likes?
I think Tengku Zafrul's point was that he was the director of in another local bank, and they had subsidiaries in those jurisdictions, so therefore he's named as a director. So I think that can be easily left aside. Dime is obviously wealthy billionaire, and he's been paying his taxes. So the question is that illegal? No. But I tell you this, that this information on the Pandora Papers and all the others that came out before that is information that the authorities will look at, all right, in their context of their investigative work, in their data points that they are looking at, making sure they have a full picture. So what happens in the normal situation, I would expect that the tax authorities or in the Revenue Board of Malaysia will be probably using this information and then trying to do a matching in terms of all the reporting that has been done in the past. And remember this, this particular leaks do not tell you the total amount of wealth, right? And remember, in the case of, for example, you mentioned Tun Dime, this is wealth accumulated over umpteen years of the fact that he's been in the business world and corporate sector. So therefore, you're going back many, many years. And and if the income has been reported in the past, substantial amounts in paying revenue, paying income taxes, then I think it will gel and is that no real issues. So all I can say is that this is just information that the authorities will need to piece together and see whether there is a mismatch between the income that has been reported here and the amount of wealth that you have in the overseas destinations or locations in whichever country it is. So then you have a situation of asking the relevant questions about source. Where did this money come from? How did you accumulate, and so on? And many of our businessmen actually do operate overseas as well. So much of their wealth is accumulated from overseas investments, which should never bring back the wealth to Malaysia. So that's another reason. So it's just information that can be looked at, but not information that immediately gives you an opportunity to raise taxes. It's just a point of investigation they can look at and query and find out. So the authorities will obviously do that whenever this information comes in. And
thank you very much.
But we will never know whether one has investigated whichever person, but that's a private piece of information. So that is probably the way it will go.
Thank you, Dr. Veerinder. That was Dr. Veerinderjeet Singh, the Non-Executive Chairman of Tricor Malaysia, a good friend of the show and of AWANI as well. We'll probably be having him on again if he wants to come during the budget season, because I'm pretty sure your statement last year, Dr. Veerinder, apparently rings true. You're a Nostradamus of sorts. You were questioning whether or not the government's targets of hitting the corporate tax earnings is going to hit the mark. It has missed the mark by a mile. So we're going to have you in for a few other premonitions here and predictions, just to stay tuned to Astro AWANI when the budget season comes in. But that was Dr. Veerinderjeet Singh. He's also the MICMA president. If you've missed any part of the show, just head on to Astro AWANI, look for Notepad over there, look for MICPA, look for Tricor, look for Veerinderjeet. Until then, thanks very much for watching and goodbye.